While the world was writing obituaries for the movie theater, predicting its inevitable death at the hands of streaming, one company was quietly building an untouchable fortress. They don't own most of the theaters. They don't produce most of the movies. Yet, for the biggest blockbusters on the planet, they can capture over 25% of the entire domestic box office. How is this possible? How did one company become so dominant that Hollywood's biggest studios are now fighting each other for a spot on their screens? This isn't just a story about movies. It's a story of a brilliant financial strategy, a technological moat, and a secret monopoly built in plain sight. And it's the reason the IMAX stock has become one of Wall Street's darlings. To understand IMAX's power, you first have to forget what you think it is. It's not just a big screen. It's a complete technology platform. From proprietary dual laser projection systems, to powerful, perfectly tuned sound, to the cameras themselves. This technological superiority led to the most important part of their strategy, the Filmed for IMAX program. Visionary directors like Christopher Nolan, Denis Villeneuve, and Ryan Coogler aren't just releasing their films in IMAX, they are shooting them with IMAX-certified cameras. They become the format's biggest advocates, telling audiences that IMAX is the only way to truly see their film. And that brings us to their business model, the secret to their dominance. IMAX doesn't get bogged down owning thousands of theaters. Instead, they operate an asset-light model. They license their technology and lease their systems to theater chains like AMC and Regal, taking a cut of the box office with far less risk. So, what happens when you combine superior technology, filmmaker evangelism, and a brilliant, low-risk business model? You get a financial flywheel that has started to spin at an incredible speed. Let's look at the numbers. Take F1, the movie. It grossed nearly $300 million globally in its first 10 days. IMAX, with less than 1% of the world's screens, accounted for over 20% of that total. In North America, it was 25%. This isn't a one-off. Sinners, Mission Impossible, blockbuster after blockbuster is crossing this 20% threshold. IMAX has become the undisputed king of the premium box office. This incredible performance is why the IMAX stock has soared, gaining over 60% in the last year, and why Wall Street analysts are getting extremely bullish. Investment firms like Wedbush, Benchmark, and B. Riley have all slapped buy or outperform ratings on the stock. Price targets have been raised to $30, $34, and even $36, a significant upside from its current price. They cite the very things we're talking about, accelerating global growth and a lean operating model that drives massive profit margins. The company is so confident, it's buying back its own stock, a lot of it. They recently increased their share repurchase program by another $100 million. That's a classic sign of a company that believes its own stock is undervalued and has the cash to prove it. Their balance sheet is healthy, with liquid assets that dwarf their short-term obligations. But here is the single greatest piece of evidence of IMAX's newfound power. This summer, they had so many Filmed for IMAX blockbusters that they literally ran out of room. The demand from studios exceeded the supply of IMAX screens. Universal's Jurassic World Rebirth had to be pushed out of a domestic IMAX run because F1, the movie, had a 3-week exclusive window. Think about that. A major studio with $1 billion franchise was denied access to the most profitable screens in the world. One analyst called it a high-class problem. It's the ultimate sign that IMAX is no longer just a service provider, they are the gatekeepers of the premium theatrical experience. This gatekeeper status is the core of their power. If you find these kinds of deep dives into corporate strategy fascinating, and you want to understand the hidden forces shaping the market, do me a favor and hit that subscribe button and turn on notifications. Because the next part of their plan is how they intend to expand this empire globally. IMAX's dominance in North America is just the beginning. Their next phase of growth is global. The company has contracts to build 500 more screens worldwide. They're forging new partnerships in Poland and expanding their footprint in Japan and Australia. But the crown jewel is China. In China, IMAX isn't just for Hollywood films. They are a dominant force for local language blockbusters. The animated feature Ne Zha 2 earned nearly $170 million in IMAX's China network alone. This diversification insulates them from Hollywood-specific risks and taps into the fastest-growing film market in the world. And the pipeline of content is stronger than ever. The upcoming slate is a murderer's row of filmed for IMAX titles: Superman, Fantastic Four, Avatar, Fire and Ash, Toy Story 5, and the next epic from Christopher Nolan, The Odyssey. Each of these films is an event, and IMAX is positioned to be the premium way to experience them. So, is the IMAX stock an unstoppable force? From a theoretical standpoint, the company has built a formidable competitive moat. But there are risks. A P/E ratio over 55 means the stock is priced for perfection. Any stumble could be punished harshly. And their success is still heavily tied to the performance of a handful of massive blockbusters each year. But the conclusion is hard to escape. IMAX has fundamentally changed the economics of the film industry. They've created a new, premium category of entertainment and crowned themselves its king. They aren't just a bigger screen in a theater, they are a technology powerhouse that has become an essential partner for creating and monetizing the most valuable content in the world. They're not just showing the game, they're changing the rules. What do you think? Is IMAX's monopoly sustainable? Let me know your thoughts in the comments below.